So I released a video just about a week ago on me selling my shares in Carnival stock, and that was meant to be an educational video explaining how I was able to turn a massive losing position into a modest winning position. And I also described, more importantly, some would argue, how I positioned Carnival in my portfolio from a risk management perspective due to the business, the industry, and the fundamentals of the company. Now, many of you gave me some really positive responses from that video, and you actually learned a thing or two from that video, which honestly makes me very happy because that's kind of my goal with the channel overall. But at the same time, there were so many comments left there that were negative, which I need to address here. And these comments were things like, you sold too soon, why did you sell, it was up 20% the next day, you have the worst timing out there, you always sell stocks before they go up even higher, if you just hold the stock for another few years you would double or triple your money, or the best one here, you're not a long-term investor because you sold your stake. So I really want to clear things up with you guys. I want to address all of these concerns in this video, and I think it's going to be another valuable video to get behind my thought process and my thinking of why I sell certain positions and why it doesn't really matter to me whether the stock keeps going up or down after I sell. Anyways guys, help me turn that like button blue, smash that like button down below. We're seeing a lot of negative comments on the channel come in recently, but I know my core audience is positive guys, so drop a positive comment down below to offset those negative Nancy's. So getting right into it, here's the first point I want to address. Pretty much I saw comments saying you sold the stake way too soon, the stock was up another 20% the next day, why didn't you just continue holding, you made a big mistake. So yeah, you guys are right, I did sell out before the stock moved up 20% the next day, and I did miss out on those profits. But more importantly, do I regret it? Did I lose sleep over it? No, absolutely not. I was thrilled to sell my position at a profit, even a modest profit. When I made the decision to sell my stake in Carnival, of course I considered the possibility that after I sell, the stock will continue moving higher. There's a 50-50 chance, guys, the stock could either go up or down after I sell, and in this case it went up. Of course, I left a lot of gains on the table, but what I did realize, which a lot of investors don't seem to think about, is that just like how it moved higher, there was a chance that it could have moved much lower the next day. I also realized that there was a high likeliness that the stock could continue moving higher, but I also realized at the same time that there was a good chance that the stock could tumble lower, especially when you look at the actual business. But guess what? It is what it is. I made a decision, I considered the pros and cons, and I was happy with my decision, and still am happy with it here today. The lesson here is that once you make a decision, an informed decision on a stock, whether that is to buy or sell, stick to your decision. Don't let the day-to-day price movements influence whether you sell today or sell tomorrow, and don't let it influence whether you buy into a company or not. Look at valuations, and that should determine whether a company is a buy or a sell. I think that if you're going to be chasing stocks on a day-to-day basis, it's a very easy and surefire way to lose a lot of money in the stock market, because stocks are irrational. Stocks can move higher, stocks can move lower. You can expect it to move higher in the short term, you can expect it to move lower in the short term, but it could do the complete opposite of what you're expecting. So to base a fundamental investment decision on what the stock price will do tomorrow or the next day makes absolutely no sense to me, and that is something that a lot of new investors need to spend the time to understand deeply. So yeah, this was the second thing I saw, and it is something I see regularly on the channel, especially when it comes to selling positions. When I sell out of a position, someone inevitably posts, you should have continued holding because the stock is going to double or triple in the next few years. Now, like my first point, I do realize that when I sell a position, stocks can continue moving higher. Just because I sold does not mean that majority of investors are selling, and if most people are buying, the price will continue moving higher. But just like how it could continue moving higher, there's a just as equal chance that I could turn around and start moving lower, especially if the core fundamentals of the business are hurting. In this case, I believe that the rally that Carnival saw was extremely optimistic and just did not make any sense to me, which is why it made sense at this point to sell out of my position. Markets can remain irrational for a very long time. More often than not, after you lose your money and close out a position at a huge loss is when things will start moving in the way you suspected. So just keep that in mind if you invest in individual stocks. Don't just think that because this is what it's supposed to do, that that's what's actually going to happen in reality. Now, like I said in my other video, I believe the problem with Carnival was that it was trading at a price that I believed it should be at in about 1 to 2 years from now. But because of the state of the market right now, everything's moving up. Bankrupt companies, companies that have no revenues, companies that have poor fundamentals, doesn't really matter. Any business is moving higher. Carnival also got caught up in that and also started moving much higher. It was not based on fundamentals. It was just based purely, in my opinion, on FOMO and euphoric optimism. So don't fall into this trap with other investments that you may have. Just because you could double your money in Carnival in the next few months or a year, you could just as easily half your investment in that same period of time if the market finally comes to its senses and realizes, hey, wait, these valuations don't make sense. Now, I do think that Carnival can probably remain around these prices for the next year or so if it executes properly on its plan. And if that's the case and the share price doesn't fluctuate too much here from the $20 to $30 range, there isn't much upside for me as an investor to hold this for the next few years. There's no dividends anymore, there's no buybacks. So as a shareholder, I'm not getting much value anymore holding the stock, and I'm just taking on unnecessary risk. Now, I'll be the first one to admit that I was lucky that Carnival was able to turn things around so quickly here, at least with the share price, and become a profitable position for me. And when I saw that happen, I did not hesitate to close out this position because I've been seeing month over month that the fundamentals just continue getting worse for this business. And while I did believe that at prices like $8 it was very cheap, I also do believe that prices right now $20, $25 today is extremely expensive. I also want to say that the allure of doubling or tripling my money in these high risk plays does not really appeal to me. It not really fits with my strategy. I like to focus on high quality companies, like you guys know, and I'd rather double or triple my money over a few years in a high quality business than risk doubling or tripling it over the next few months in these low quality businesses. It's just the way I am. I don't like losing money on investments that I can't stand behind, so it is what it is. So this was the craziest one of them all, guys. People saying I'm not a long-term investor because I sold out of this position. Yes, I bought this position back in around February, I believe it was. So I did hold it only for a few months and I did sell out of this position just in the last couple of weeks or so. So because I did that, it doesn't make me a long-term investor. Well, there's something I want to really clear up because there's a big misconception here when it comes to long-term investing. So what exactly is a long-term investor? Someone who invests in businesses for the long term because they believe the business will be a better company over time and they want to capture that capital appreciation as the business continues improving over time. A long-term investor isn't typically interested in buying and selling into a position on a day-to-day basis or a week-to-week basis or whatever. They just want to buy it at a good value and continue holding it until the value doesn't make sense anymore. But now the key to understand is that these investment decisions are typically based on fundamental decisions of the business. If the fundamentals of the business change, that investment could also change. This is why even long-term investors will sell out of a position that they just bought recently because fundamentals have changed and the long-term outlook for the business does not look like what it was when they first bought in, and they see more downside than upside in the business or the industry going forward. Don't believe me? Well, we all know that Warren Buffett recently sold out of his airline stocks, and he, funny enough, bought them and sold them in the same quarter and took massive losses on these positions as well. Why did he do this? Well, the fundamentals changed in the airline industry and a lot of these businesses were changed maybe permanently for the worse, and Buffett didn't want anything to do with these companies anymore. Likewise with me, with Carnival, the core reason as to why I sold the stock was not because I was up on my position or not because I got scared of holding the stock. I mean, I bought this stock at $8 per share, which is pretty much at its lows when bankruptcy was just around the corner. So I don't really think that saying that I was scared makes sense. But regardless, the reason I sold was because the underlying changed so much for the worse. They took on so much more debt. They're not going to be profitable for a while. Their debt is at a high interest rate as well. And the business and the industry are just fundamentally hurting to the point where current valuations make no sense. And like I said before, I see these prices that they're at right now more sustainable in the next 2 to 3 years than they are here today. On top of all of this, shareholders are not going to be a priority for this business anymore, and I like to invest in companies that prioritize shareholders through dividends or share buybacks or just by being transparent. And I believe that Carnival over the last few months has shown that they're not really going to be putting shareholders first and they're going to be focusing on their business, rightly so, in the meantime. So guys, don't get me wrong. I don't think that Carnival is going to be going bankrupt or anything like that. I think they did what they needed to do to sustain this business and get them through these tough times. But because of that, guys, there's a lot of fundamental things in the business now that as a shareholder makes no sense to me to continue holding the stock at these prices anymore. Things change in the stock market and things change with businesses, and I as an investor will always be evaluating my positions to make sure that they align with my strategy and make sense for me as a long-term investor. So I hope this clears things up, but I know a lot of you guys in the comment section were extremely upset with me for selling this position. I don't really understand the mentality behind that. I made a decision, I executed on that decision, and I'm happy with that decision. So at the end of the day, it was my capital and I was happy with what I did. If you guys disagree with me, that's great. You're happy to do whatever you want with your capital. I'm not here to tell you not to or to do something with your investments. But at the end of the day, you just have to make sure that whatever you do, you're happy standing behind and you're able to sleep at night knowing that the business that you're holding will be a much better business in the future than it is today. So guys, I hope this video was insightful to you. I hope that you were able to understand a bit more about my thought process behind selling my Carnival position. And I hope that you learned at least one valuable thing from this video which you can maybe take and use in your investment career. But either way, thank you so much for watching, guys. Remember to drop a like down below to show your support for this channel. But either way, don't forget to invest positively, and I'll see you in the next one.